welcome to the final Market Guard video of the year. Hard to believe that we are already in December. It seems like it just keeps going so quick. But what a year it's been. Great results in the markets, great results across the board in all of the portfolios. As we can see here, now that we are on the other side of the election, which was always one of the biggest concerns out there, what's going to happen? What's going to happen to the markets? Now we have those answers. It's always good to have answers because then you can adjust accordingly. And what we've seen here as we take a look at markets in a glimpse is we're going to take a look at what took place in November. Where do we see things happening in December? And then as we look into 2025. So let's jump right into it and let's take a look at markets in a glimpse. Our first bullet point, we see that Wall Street reached new all-time highs as a result from the outcome of the U.S. elections, as well as a ceasefire between Israel and Hezbollah. So a combination, primarily due to the U.S. election, we really saw a lot of nice momentum taking place, a lot of increase all the way across the board. Markets really were in favor of what took place there. And then adding a little bit of sprinkles on top was, again, this nice ceasefire that has been declared and taking place between Israel and Hezbollah for the time being. Next bullet point is we saw better than expected macroeconomic data in the U.S., combined with the tax-friendly Trump administration. And this has led to global investors to favor U.S. equities and the U.S. dollar. Again, seeing this nice surge taking place post the election. The fiscal budget instability concerns were lifted as well, and this is due to the Trump administration nominating Scott Bessent as Treasury Secretary. This alleviated market anxieties, taking pressure off of the 10-year Treasury yield. So that was also under pressure in November. Once the announcement from the Trump administration of putting Scott Bessent in that position, the yields decreased, and again, that was in favor of how you want the markets to react. And the last thing that also soared post the U.S. election is the spot price of Bitcoin. This saw a massive surge that we're going to look at here in just 1 second. So basically, all the way across the board, whether it was U.S. equities, whether it was commodities, alternatives, if it's the U.S., the Bitcoin prices, everything saw a nice increase. Let's take a moment and discuss the ETF portfolios first, and then we'll talk about the trades also recently made to the stock portfolios as well. But focusing on ETFs, we made adjustments last month, and the main focus was this. The algorithm with Market Guard signaled to reduce exposure to some of the large and giant cap, and primarily in the growth sector of the market. Because when you have the market, you've got the growth and the value companies. So it reduced that exposure to large cap growth, and it increased the exposure to small and mid cap companies as well as value companies. So let's take a look at this chart here, and we can see exactly what took place for the month of November. The green line is the Russell 2000. This is primarily made up of your mid and small cap companies. The blue line is the Dow Jones. Those are your value companies. The orange is the NASDAQ, and the purple is the S&P 500. As we just mentioned, in the month of November on the front side, when we placed our trade, we increased the exposure to small and mid-cap companies as well as to value companies. Now what we're seeing as we had this nice surge going throughout the month, what the algorithm's also sharing with us is there could be a potential pullback due to the spike that happened here. So what our adjustments are going to be is we are going to take some profits off the table, and then it's going to deploy through other aspects inside the portfolio. So a really nice grab of the gains on the way up, and then now taking some of those profits and redeploying them in the areas that the algorithm is signaling to do so. So what does that look like overall? Overall, inside of our target portfolio, we have now seen an increase in equities up to roughly 71%, as well as an increase inside of fixed income. Now, the fixed income increase took place specifically this month inside of corporate bonds and high yield bonds. Those fixed income areas typically correlate with equities. And so we're seeing the algorithm signal to move further into those with a slight decrease coming out of some of the treasury areas. And treasuries sometimes will lag when equity markets are increasing. So again, this is a perfect balance of increasing in equities, very strategically of where and how, taking some of those profits, redeploying that capital, as well as increasing the components of fixed income that a lot of times goes hand in hand and rises when equities rise as well. On the dynamic side, exact same thing, just a little bit less of an increase, taking a little bit more of a conservative approach. So what's the big thing we want to remind you of? Inside the Market Guard ETF portfolios, what is so powerful, we believe, about these strategies is it gives you and your advisor the opportunity to say, I want to set how much I want in equities and fixed income, meaning if you wanted a 60-40 portfolio, you would apply 60% to equities and 40% to fixed income. Then, like we always use the chocolate chip cookie analogy, set your temperature on your oven. As you can see, static always remains fully invested. So you could think of that as baking the cookies as hot as possible so they bake as quickly as possible. Then you have target, which its rules-based system never takes out more than 50% of any one position inside of a portfolio. So it's like turning the temperature down, but still leaving it just warm enough that it's going to bake them pretty quickly, but not too fast so you don't risk those cookies getting burnt. And then dynamic is designed to say it can go all the way from being fully invested to fully removed or anywhere in between. So it's the slow and steady approach to say, I really want to make sure those cookies don't get burnt, and I want to be slow and steady with how they cook. I don't need them right away. If I want my cookies really fast and quick, I need to turn up the heat to my oven. If I want them slow and steady, I can put it at dynamic, or if I want to just kind of be right down the middle, then target is a great solution. So hopefully that concept helps when you think about it like cookies, and you can see where we've increased and where we've set it. So it can be so personalized and customized to you of specifically how you like your portfolio and how you like your ride to be when it comes to investing in the markets. Now, there's another area of the markets that we talked about that saw a great surge for the month of November and going into December, and that was the cryptocurrency market, specifically Bitcoin. So let's take that same graph we looked at before and now put the spot price of Bitcoin on it. Boom, there you have it. So just for the month of November alone, heading into December, we saw these other areas that were up 5.8 to 9.69, which were great for single months. But look at Bitcoin, up almost 41.5% in a single month. Inside of our MG blockchain strategy that has an emphasis and a focus on specifically the spot price of Bitcoin, as well as other publicly traded companies that are in that space, inside the crypto space, inside of the blockchain space, and so on and so forth. Again, very favorable results for both the month of November as well as the entire year. When it comes to our stock portfolios, again, very pleased with the outcome there as well. They've been producing great results all year long. And the way that that model is positioned is it's designed that, as we've always talked about, remember it's the haystack, and we said the needles are in there. The question is, how do you find them? We believe that the Market Guard quantamental approach with our stock portfolios for both MG Op and MG Op Div is like taking this magnet that we've created, placing it over the haystack, and it pulls the needles out. So as we repeat that process, here's what's really powerful about it. It's not just grabbing the top 100 companies of size. It grabs what we believe are the top 100 companies throughout the entire stock market. What that means is large, mid, and small cap companies on both the value side and the growth side. So it's allowed to look at the entire market to pull out what, again, we believe with that strategy is the top 100 companies. So the last rotation, what we experienced in there is it grabbed a lot of those small and mid-cap companies, and as a result, we saw that directly correlate to the performance inside the portfolio. So again, very pleased with the results of our stock portfolios, the emerging tech portfolios, the blockchain portfolios, and of course, the ETF portfolios as well. That concludes our last video for the year, and we will see you in January 2025. In the meantime, Merry Christmas, Happy New Year, and we'll see you same time, same place next year.